Learn Wealthy, your go-to channel for real estate insights, market charts, and golden opportunities.
Hey everyone, it's James Santiago from Learn Wealthy. Let me paint you a picture of what's going on in the housing market right now. Imagine two kids on a playground playing tug of war. But instead of anyone pulling harder, they're just standing there, staring at each other down. That's what we've got in the housing market. Buyers on one side and sellers on the other. And neither one is budging. Welcome to the nothing market. So picture this. The buyers are out there like, I really want to buy a home, but I can't afford to. And sellers are like, I might want to sell, but why would I give up my 2% mortgage just to rent? Or buy at 7% mortgage? So what do we have? We have a standoff. We have a standoff that would make a spaghetti western look tame. The question is, who's going to crack first?
Look at this.
So let's start with the buyers. They're like that one friend who shows up to every potluck without any food because, well, they're broke. Interest rates have jumped so high, well, average historically, but combine this with the all-time high house prices, then the buyers are just running out of steam and it's about to get worse. Why? Because the yield curve, which is basically Wall Street's version of a crystal ball, and it just uninverted, which means we are knocking at doors of a recession. The Buffett indicator, which compares the stock market to the GDP, is screaming, hey, the stock market is overvalued. And it's about twice the size of the U.S. economy. And then we have the SOMS rule, which tracks employment trends. Well, it's already waving the red flag, telling us that job losses are on the horizon. Except the most recent job numbers, because, well, maybe it's election in 4 weeks. But don't worry, you can always expect these job numbers to be revised downward. So here's what's likely to happen. When the recession hits, banks are going to start playing it safe. Even if the Fed says, hey, we'll lower rates, the banks are going to be like, thanks, but no thanks, and tighten their lending belts. And if the government steps in with some helicopter money, PPP loans, stimulus checks, boom, inflation will skyrocket yet again, and we haven't even recovered from the inflation from the last 3-4 years. And buyers are already tapping out. Don't you think buyers can't take any more inflation? So even with a shower of all new helicopter money, I don't think buyers can handle worse inflation at this point. Unless wages catch up. Let's be real. The buyers have been out here like Rocky at the end of the first movie. Beat up, bruised, but still kind of standing. For the last year, they've been tapping out. On average, rent is nearly $1,000 cheaper per month than owning a home. And I'm not even talking about the down payments, closing costs, or that home maintenance nightmare you signed up for when buying a home. Buyers are over it. They've bent as far as they can withstand without snapping. And let me tell you, they're not about to budge. I don't think there's a lot of room to bend even further. The sellers, on the other hand, we've got sellers living the dream of a 2% interest rates, aka the golden handcuffs. Why would they ever sell? Imagine telling them, hey, sell your house and rent, or maybe buy another place at 7%. It's laughable, right? But here's the twist. Recession doesn't care about your mortgage rate. If you lose your job, or if your 401k tanks, you're still going to have to pay those property taxes, utilities, home repairs, and insurance. Unless you want your home uninsured. And guess what? We saw this play out in 2008. Even folks with paid off homes got foreclosed on because they couldn't afford their property taxes. So if unemployment continues to rise, sellers might be forced to sell no matter how low their interest rate is. That might be the force that will break the shackles of the golden handcuff. Also, people with the golden handcuffs with 2% interest rates have been disappearing this last 3 years. for reasons like necessity of selling, like death or having to transfer to another place and having to sell the house. These golden handcuffs are not going to stay forever. Here's another kicker. If sellers have vacant properties just sitting there, paying for utilities, HOA fees, property taxes, and insurance, they might finally throw in the towel and list the place. It's like owning a boat. You dream about it, but the upkeep will kill you. So, who's going to tap out first? My money is on the sellers. Buyers are already down for the count. They've been broken, battered, and drained of all their purchasing power. Meanwhile, sellers are still sitting pretty for now. But as the economy tightens, sellers will be the ones to blink first, and we could be headed into a buyer's market. Let me know what you think in the comments. Do you think buyers or sellers will crack first? Or are we just gonna stay stuck in this weird nothing market forever? And as always, for more finance, investing, real estate, and macroeconomics, let's all learn wealthy together.